Hey, good morning. Thanks for joining. This is Roger Royse, founder of the Royse Law Firm, a business, corporate, and tax firm in Menlo Park with offices in San Francisco and Los Angeles. I want to welcome you to today's webinar on the gig sharing peer-to-peer economy, the future of the innovation economy. This is a really popular topic. We've got a great panel for you today. We're going to hear the business and investment aspects of this new economy and the new business models that are emerging. As you probably know, this is part of a series on the gig sharing and peer-to-peer economy. Last month, we had a presentation from some governmental academics and policy people on the policy aspects of all of these new models and how government is responding and how they should respond to new ways of doing business. This week, we're going to kind of drill down more on the business aspects. What actually are some of the new models that are emerging out there? You know, what are the opportunities? What are the challenges? What's investable? What are people investing in? What can we expect the future to hold for new types of business models and new types of services that are being enabled by technology advances as well as changes in government policy? If you are tweeting today, use hashtag Royse University. You can also tweet to us at Royse University, at Royse Law. I want to remind people that this webinar is being recorded. You'll be able to listen to it later, play it back, hear it in your car, download it on the iTunes as a podcast in the iTunes store. But you'll find it recorded on Royse University under webinars. It'll also be on the Royse Law YouTube site under our recorded videos. Before we get started, just one more housekeeping announcement. You'll notice if in the right-hand corner of your screen, there's a dialog box. So if you want to ask questions, you're able to just type those questions in. We'll take them towards the end of the program here. We want to make this very interactive and very much a discussion. And if you have the mobile version, you'll find that question dialog box at the bottom of your screen. So what I'm going to do is I'm going to briefly introduce the topic. I'm going to introduce the speakers. I'm going to let them say a few words about how they come to the area, what they think about it, any points they want to get across, and then we're just going to go ahead and launch into a discussion. And again, I invite you, the audience, to join the discussion by sending us your questions. So, new developments, new technologies in the gig peer-to-peer sharing and innovation economies. What's new and what will the future hold? We have today a really great panel. Shelley James is the CEO and founder at SideDoor. She's calling us from Colorado today. She's from Minnesota and now lives in Boulder. And SideDoor is a real estate marketplace that allows home buyers and sellers to do their transactions online without any agents or their fees. You know, it's one of those ideas that we've heard about for a long time, and we found somebody who has finally pulled it off. Shelley was a real estate agent doing investment properties before she started this venture, and now this is her new career, and she's been very successful at it. Mario Tapia is a community leader in product realization and an investor. He runs an accelerator in San Francisco. He's involved in venture capital and private equity. He also runs Mobile Monday Silicon Valley that you may have heard about, as well as the Momentum Venture Partners, and does a lot of work in the area. And I want to remind everybody that if you're not speaking, to go ahead and mute your phone so we don't pick up any of the background noise. Andrew Romans is general partner of Rubicon Venture Capital. It is a venture capital firm here in the San Francisco area. He's an active early stage VC fund with offices not only in San Francisco, but also New York City. They focus on consumer and enterprise technology on the internet, software, and hardware, late seed, Series A, Series B. They raise capital from corporates, high net worth individuals, and invest here in Silicon Valley. He's been a VC for 21 years. He's been a founder, he's been a CEO, and he has a particular interest in this space. He is also the author of a book, Masters of Corporate Venture Capital, available on Amazon and in bookstores, that's been translated numerous languages. It's a very popular book. It's read all around the world. And Gianni Maxemin is the founder of the company Pied Parker. It is currently a sharing, or I guess we'll call it a sharing economy business. It's a startup. And he is, before that, he was with, I guess it's afamilyfriendgroup.com, a digital marketing firm, which helps construct marketing campaigns with returns on investment. But Pied Parker is something that we'll hear more about. It's a parking app that is disrupting a space that is long overdue to be disrupted. That's finding parking in major metropolitan areas. So with that, I think we'll start with you, Shelley. Maybe you could tell us a little bit about yourself, how you come to the area, what your company is doing, and any comments you'd like to give us about the future of the innovation economy.
Yeah, thank you so much for having me. I really appreciate it, Roger. I think you covered it pretty well, actually. So thank you for that summary and introduction on myself. Yeah, I was a real estate agent for a long time, top realtor in Denver, Boulder area, and I came to the conclusion, doing my own flips and investment properties, that there has to be a better way. And of course, there's a lot of red tape around why this hasn't existed before. It essentially requires us building a whole new marketplace, which is what we're working on. So we've grown. We now have about 25% of the for sale by owner market in the Colorado area, and we're looking to expand in this coming year to 5 other cities. So thank you, I do appreciate that. As far as the sharing economy goes, we are a peer-to-peer business, and I think it's just becoming more and more prevalent these days. A lot of people, I just saw an article I think yesterday, which I don't necessarily agree with, but it said fast food is disappearing because millennials don't want to talk to people. I actually think it might be kind of the opposite. I don't know how much I agree with that, being a millennial, quote unquote, myself. I think people actually do want to talk to each other, and they do want to build a community, and they want to do so by taking out the middleman so they can go back to the basics of having a true personal connection and doing business in a very basic way. So I guess that would be my comment on the sharing economy.
Okay, thanks very much. Mario, can you tell us a little bit about what you're seeing in the market and what you folks do at Mobile Monday and Momentum?
So I've been observing from the startup ecosystem on demand for probably 7 years now. From seeing Travis's first demo with Uber when he had one black car, right? And it was kind of that and some other services, right, were kind of novelties when they first started. And it was hard to see the real value of the business until they started to scale, and we started to realize how disruptive they've become. I think so. Some of my thoughts is, we've seen a lot of verticals get disrupted, right? So we're seeing transportation, we're seeing actual food and delivery. We're seeing, even the basic, cleaners, right? Washio and some other companies like that. And so what I do like is that it is changing the future of work. It's also allowing people to have flexible schedules. It also is removing the friction in a lot of these other services, right? That normally we may not have used in the past, but we're using because it's very easy to pay for. It's also very easy to basically get the service and get it done. And I think the biggest revolution in all of this has been the mobile device, right? At the end of the day, putting GPS, being able to see, just the novelty of being able to see where your ride or the service is on the way it's inbound or outbound, for both the consumer and the service provider have been revolutionary, right? Just a very simple thing of tracking, where is my plumber, when is he going to be here, to where is the plumber and when is he going to get to the client, right? I think those have been a couple of things that 10 years ago we wouldn't be having this conversation, right? And things have happened very quickly, but I think some of the discussion points that we have, laid out for today and about policy and regulation I think those could disrupt the growth, and also disrupt some of the innovation. But we can talk about that when we get to it.
Okay, thanks very much. So, I was looking at some statistics earlier, and I see that Lyft raised $1 billion from investors this year. How much did Airbnb raise? Probably billions as well. Uber, is worth billions. Just by comparison, those are bigger than the companies the largest companies that they're displacing in hotels and rental cars. So it seems to me that there's a lot of opportunity for investment in this area. Would you like to introduce yourself and maybe say a few words of what you think about the investment outlook?
Yeah, sure. I think that this is a very important topic. If you look at the internet itself and mobile phones / smartphones are basically able to disrupt everything. So when the original 1.0 internet came along, this was an opportunity to disintermediate a whole lot of people and make it possible for consumers to make purchases much cheaper and much happier. Now, when Uber came along, I kind of thought of it originally as a Los Angeles thing where if you are an aspiring actor, you don't have to take a job at the Gap and to get an audition. You can just go show up and take the audition and then continue to Uber drive around town. So you've got that flexible work schedule, and that works for the person that wants to take the audition as opposed to having a crappy job at the Gap at some shopping mall where you get fired for taking the audition. This actually applies to like almost everything. So you have sort of Uber for X, the sharing economy, or this 1099 flexible, employee thing. And so for entrepreneurs thinking of a new startup to create, or investors like myself thinking of startups to invest in, this is actually very, very, very exciting. At the same time, it doesn't always work. And you got to kind of play it out to see what happens. We invested in a company called TrueMaker, where they did a little bit of Uber for X, where they had 1099 flexible employees working at their leisure to becoming outfitters. So for guys like Roger Royse and me that are kind of like too boring or geeky to know how to dress well, they actually send someone to our office or home as an outfitter and measure our bodies and get perfect fit clothing and tell us what to wear. They then found that the flexible 1099 people were less effective than full-time employees. And so TrueMaker has been pivoting to, they started off like Uber for X, and now they're focused more on employing people full-time as outfitters, sending them to measure me and Roger and tell us what to wear, and it changes. So I just want to say that it's a huge opportunity. Business models can be like technology in themselves. Amazon's a great example. It was a business model purely, and it became a technology play. And I think this kind of shared economy Uber for X thing is very serious as the internet and as serious as mobile. Roger, I'll give it back to you there.
Okay, thanks very much. I'm going to have to check out that company. And that's an interesting point about how companies are sort of going back to using employees and looking more traditional all the time. We actually have this webinar as part of a series, and we actually have a program coming up on on October 19th on employment issues, where we'll cover exactly that. So with that, Gianni, you're another real life, just like Shelley, another real life peer-to-peer sharing economy business, startup company, disrupting a new area. Can you tell us a little bit about what you're doing?
Yeah, definitely. So Pied Parker Inc., the play off of Pied Piper from Silicon Valley. It's about, allowing users to use these unused assets called these parking spots, driveways or garages, And what it allows people to do, if it works out in its truest form, is it allows traffic congestion as a total to be reduced by 30 to 60%, considering, some of the stats and analysis from IBM and Cisco have generated that, city grids, major traffic problems are caused because of a lot of the on-street parking. With that being said, we've totally been impacted by some of the gig economy as far as, contractors. When you first start off, how much funding do you raise, and how much of that can you give to an employee without, hitting costs with, are you being a legal company, right? So it's been an interesting fold, but there's definitely some scares when you see things like in Dallas or Marin for Airbnb and for Uber, and some of the things that they've ran into with the local governments. But so far so good.
Okay, well, let me kind of stay with you for a minute here, Gianni. I know a little bit about the space that you're in, and I think you're with Pied Parker, and that seems to me to be a textbook example of some of the challenges that new economy businesses are having in an old economy world. Can you talk a little bit about that, what you've been up against and what you've had to overcome, and how the system might not have been as receptive and set up to doing something disruptive as we would have hoped, and how you managed to get past that?
Yeah, great question. So, a lot of my background was, working with former Lieutenant Governor, now Congressman John Garamendi, when I was going to school at UC Davis, and I got to see some of the, major influences that can impact a local economy if the government is brought in properly. So, with that as like a little prelude, when we were first going out, we came out with some of the major parking garages and lots, because as you can imagine, if you want to give parking to everyone around you, you better have the inventory to supply it. You'd rather not show 100 spots. If we're using San Francisco, and I apologize for that microclimate, but if we use San Francisco as an example, if we just give parking spaces only in the marina area, and we don't focus on Mission and Pacific Heights, etc., like all these neighboring cities or neighborhoods, it really reduces the impact that we can give to everyone as far as parking and availability. But once we started getting ourselves more and more more inventory of parking spaces and more types, more importantly, the types of these parking spaces, we ran up against some pretty considerable obstacles. We were hit possibly with taxes reaching over 23%, which, as you guys can imagine, in any business model is a failure. So we had to reduce our platform to a complete open canvas to allow people just as a pass-through without us managing any parking spaces. But what we did is we started hiring a lot of different types of ambassadors and advisors, these people that have worked with mayors of certain cities, and we basically said, we want to play ball. We're not here, as Pied Parker or any tech company, we're not here to just bulldoze you guys. We really want to give back to the community. So we started adding different types of referral fees, literally giving a percentage of revenue, which sounds dangerous, but it actually was our best friend. So those are kind of some of the ways that we went up against some of those obstacles.
So you really had to engage and cooperate with the old established regulatory machine. So Shelley, how about you? I got to believe that you must have run into massive resistance from the real estate industry. Was there a challenge there, and was there a workaround that you found in order to get your product, your company into the market?
Yeah, it's funny you should ask. I actually, before getting into the accelerator we went through last year, during one of the interviews, I told them that over the last few years, because this became an idea in 2013, that I had to essentially, quote unquote, date lawyers for a few years. So I would take them to coffees and lunches and figure out my way around the real estate laws. And so we had to figure out, one, a way around how are we not a brokerage? And two, how do we make money not based on the success of sale, because that makes us a brokerage by default. So yeah, there was an enormous amount of research that went into play before we could even create a business model that was viable. And that generated a significant amount of revenue. And so it took years, honestly, to find a win-win-win. And we finally found what that truly is in the real estate world. And it took me essentially getting my law degree to figure it out. So in my case, we have to actually go completely around the National Association of Realtors. We have to go completely around the commission or the structures that are now. We're creating a whole new system because we can't play ball with them. It's not possible. They don't make it possible for sale by owners to do it themselves in their model. So yeah, we can't work with them, unfortunately, or play ball.
So it sounds like you've taken that's a lot of coffee dates, by the way. You're a real trooper.
Yeah.
Especially if it's all lawyers. But it sounds like you took exactly the opposite approach from Gianni. In other words, where Gianni is engaging with the established economy and giving them a percentage, if that's what it takes, you've looked for a way to just create the platform that completely disrupts the model and doesn't play in that sandbox at all, I think is what I'm hearing.
Correct. Yeah, I think I am a masochist in terms of dating lawyers, but yeah, we had to go completely around it. There was just too much red tape, and so it required being incredibly creative in figuring out a way around the broken model that it is right now and creating a whole new one. So yeah, you're exactly right in that.
Okay, well, thanks for that experience. Let me shift gears a little bit because it sounds like the challenges that these companies have are going to vary from industry to industry. And Mario, you do quite a lot with mobile, and I think a lot of these companies are, I think these are mobile enabled. In fact, it's probably because of advances in mobile technology, like Andrew said, it's because of the iPhone that a lot of these companies can even exist. Can you give me maybe an insight into some of the things that you're seeing, or maybe some of the companies and technologies and businesses that are evolving now just because of the expanded use of iPhones and mobile devices?
Yeah, I mean, there's like as early as 2009, GigWalk, hit the market, and that was really for looking for spot jobs that were around my community, my neighborhood, right? And those are, I think, some of the early signs of how the future of work was going to make an impact and how things were going to change. I think going back again, talking about GPS and the location aware and having some knowledge of what's around me and what's available for work is great, and who needs work to be done, and also having an on-demand workforce. I think that is also evolving. There's an old industry, right, that we have. It's called call centers, right? So when you call up AT&T or Comcast customer care, there's about 30,000 people on the other end of that line when you call in, specifically if it's Comcast or AT&T. So they have large teams, but they're not employees of the company that you're calling for. They're contract hires. And so I've seen some changes in that vertical as well, where you and I could be, just like if we're at home, nothing to do, I can log in, and my phone will ring and take calls as they come in, right? Or there's tasks. I think another thing that has changed recently has been, we call it Mechanical Turk, and that's really, I have really, really simple tasks to be done. Amazon's done this and some other companies. And I need, but it can't be done by a machine. It needs to be done by a human. And I need to outsource that, right? And so we've been seeing, this type of effort being, it doesn't need, your workers don't have to be physically present, right? The workers can be in the Philippines, they can be in India, they can be in emerging markets, right? Where the cost is a lot lower. And so we are seeing a shift in the workforce, menial jobs leaving our borders and basically going to other places around the world. I think that in the digital age, whoever's working on the other end in the emerging market doesn't really need a PC. They can use their phone, right, to do a lot of these efforts. And so I think that's another disruptor that I've been seeing in terms of how mobile is enabling work to be transformed over to emerging markets to do menial tasks, nothing so with a lot of responsibility, but some simple things, and also it's pretty cheap. So yeah, so.
Okay, well, those are a couple of good examples. Kind of following up on that, Andrew, I was looking at PricewaterhouseCoopers did a study, and they say in 2015 the sharing economy was a $15 billion worldwide industry, but it's going to be a $335 billion industry by 2025. I mean, that's a tremendous amount of growth. I mean, that's really kind of incredible, and those are just current projections. So I guess what I'm wondering is, where is that going to happen? What's the smart money? What are the VCs betting on where we're going to see disruption and in terms of companies that are going to create that much wealth?
Sure. Well, I mean, I think that if you're applying the Uber for X to any industry, we receive a lot of business, proposals every day, and almost like every industry has been targeted by entrepreneurs. Like, rather than pay one company to mow your lawn and do your landscaping, someone's going to go 1099 Uber for X that and try and use really nice mobile phone, tablet, web-based thing to enable some guy who's willing to mow your lawn go through him. And so it becomes like Lyft or Uber for any damn industry. From our perspective as investors, we're looking for really positive unit economics and growth and traction. So if it's mainly a business model play, and yeah, they've made it really convenient and sticky for the person doing the labor to have that ability to not have to look for the client and just execute the work, and to have all their business life made convenient from the platform, like Uber or Lyft, but for mowing lawns or massages or whatever it is they do. From an investor perspective, we want to make sure it's a good business, though. I mean, is this really profitable? Is it loss making, or can it tip into profitability if you were to sacrifice some growth? And that remains to be seen. I kind of think the arbitrage opportunity of low-cost labor doesn't excite me massively as an investor. I prefer to see the miracle of technology than just arbitrage opportunity on labor. If you just look at China, China has benefited for the last 30 years with the arbitrage opportunity that labor costs less in China than it does outside of China. But I've paid over $300 a night for a hotel room in China. It's getting expensive. And I think that the low-cost labor is going to leave China and go to India and Vietnam, and China needs to reinvent itself is more of a technology play. So from the investor perspective, I get more excited by seeing technology that truly adds value to any process than just telemedicine of having a diagnostic done in India or something with flexible 1099s a la Uber. So I prefer real technology to just arbitrage opportunity of the cost of labor. Put it back to you, Roger.
Well, yeah, that's interesting. Let's pause on that. So when you say real technology, that would be something, I assume, that would reduce the cost of the transaction. For example, I hate to just talk about Uber and Lyft all hour, but they're such a great example. I mean, they really have reduced the cost for me getting across town. That's partly because the labor is less, but it's also because the technology enables it. Is that sort of what you mean when you say real technology?
Popping off of mute. Yeah, Roger, the thing about Lyft and Uber, which is amazing, is I think I can remember standing with you, Roger, in San Francisco saying, God damn it, I can't get a taxi. That was only a couple of years ago that you and I were standing in the rain in San Francisco trying to get a cab, and we had to walk 3 blocks to a hotel and stand in some massive queue to get a damn cab. The awesome thing about Uber and Lyft is that in our lifetime, that's over. We will never have to wait for a taxi like that ever again in SF, and we can live like we're in New York City where the taxis are abundant and get a cab right away. I think that, so that one was massive. It was a real problem. Also, I travel a lot internationally, typically Moscow, Russia, and I get a taxi as an American, I expect to get ripped off. I love the fact that I can get a taxi, I can call a taxi from my iPhone sitting in Moscow or Amsterdam or anywhere, and I know that the price is set by Travis in San Francisco. No more getting ripped off. That's truly disruptive in an industry that's just everywhere around us. And it's an awesome leap forward, honestly, for mankind. And everyone just bitches about the valuation of Uber and Lyft, but it really is serious. Now, to extend that outside of the taxi industry, which has always sucked, into other industries, it can be interesting. The thing is, does it have positive unit economics? And from the investor perspective, is there any technology to make me care? I think that sometimes, like someone said earlier, like the fact that we have like mobile positioning, like GPS tracking of where you are, adds value to things. The internet was a leap forward. Disintermediate a lot of annoying middlemen and make it cheaper and faster. Why talk to some idiot travel agent when you can just book your flight on Kayak or Travelocity or, Expedia? Then there was a leap forward of the mobile phone, which knows where you are. Now there's sort of big data, artificial intelligence, and a whole lot of things adding value. If you bring technology into the mix, you can attack some big industry and probably add some value. It may work for you as an entrepreneur / investor that you've got a business model with flexible workforce that are able to dip in and dip out to go to the audition or whatever. And I think it's worth considering for every industry. But
yeah.
In closing, for me as an investor, I really want to see some tech, because if there's no tech, if there's no technology, then what's to stop anyone else from launching a copycat and the margins race to zero or worse into the minus, and investors are enabling a startup to give people $1 for 85 cents of revenue, and that's bad. So I like to see some technology.
So Roger, this is Mario, and I think to add to Andrew's comments, there isn't a lot of sophistication in Uber or Lyft, to be honest with you. Probably the #1 asset in any of these taxi applications is the routing. That is probably the most difficult feature set that any of these services can have. And there's only 3 companies in the world that own routing, right? That's going to be Google with Waze, you have Here, and you have TomTom. And it was like, who's TomTom, right? Remember the old P&D navigation guys? Well, they can also do navigation, just like everyone else. And so that's about it. No one else in the world can provide routing as well as these 3 companies. And if you do routing, you probably are a customer of one of the 3. And now Uber owns one of those companies, so that's been taken off the table. So now you have about two companies to deal with. So the sophistication isn't there. I think they were able to get market share. because you can, like, just like Lyft. By the way, Lyft had what we called the version of Uber X before Uber had Uber X, right? And so Uber's claim to fame and their hyper growth happened when Uber X was launched, not when they had Black Car, because it was a $70 Black Car ride to SFO from San Francisco, probably probably twice the normal rate, and I think market share doesn't really mean technology in a sense, right? Airbnb, Kayak, Expedia, come on, they're all the same. Booking, travel, online, it's pretty easy, and that's why there's so many, right, to choose from. It's just that certain players got to the market first and were able to get market share. So there is a differentiation between technology and success versus just having success and getting the market share. And some of these companies, at least for the on-demand, the sophistication of technology really isn't there. I mean, it's pretty. Any development team can build copycats, right? It's getting that market acquisition is the tough part.
Yeah, Mario, let me follow up on that, especially with our two entrepreneurs here, because you're sort of begging the question. I hear you when you say the technology is key. It's essential, but it's not enough. What does it take to get that market share? Isn't this really a design problem? Because that's sort of how I look at it. I mean, I've seen gig economy sites forever that just didn't take off because they were just a little too clunky. They just weren't quite as user-friendly. They didn't work, especially for someone like me, who doesn't have the patience to go get a degree in software engineering, and I want it to be easy. So I tend to think it's a design problem, but we've got two successful entrepreneurs who have managed to basically crack this nut and have put a product out into the market. How did you guys get market share, Gianni and Shelley?
I'll speak to that if you don't mind, really quick. I just have two thoughts on it. I think you kind of hit the nail on the head first with the UI UX design. That's very important. Obviously, it can't be clunky. But then again, you look at, for instance, Craigslist. And I don't think they've updated their UI UX since the late '90s, and they're still able to do it. So it's not necessarily true that it needs to be anything hugely UI UX friendly. It just needs to be very simple and basic. And then the second thing, I think the biggest thing right now in terms of people dominating some market share is twofold. One, I think it comes down to data. You have to really show that you have a data set that's really unique to what you're doing, and I think that becomes the most valuable part of a startup these days, and that's what actually I think gets startups acquired, and maybe Andrew can comment on this as well, but I think if there is going to be any value in a startup, it does come down to that data as well as just making sure, obviously, the proven market fit has to be there and that you're actually having a lot of traction. But those would be the top things that I see in terms of gaining a market share.
Yeah. I mean, so to add to that, yeah, design, mission imperative, right? You're not going to sell, a Big Mac that looks puke green, right? You're not going to sell, a chair with spikes on the seat. You've got to really formulate and create something that, is simple, user-friendly, but more importantly, it addresses the problem, right? What I feel like a lot of apps that are rolling out, a lot of different types of designs that I've seen are rolling out with is they're very complicated. They're very complicated systems. And if you want to take a note from Ashton Kutcher's book, right, and you want to think of good apps that are coming out as far as time saved, you've got to really make sure that you're not adding to this time problem with learning curves and other things that might be generational focused, right? A lot of times when I know when we were creating Pied Parker, we were just cranking our heads and saying, hey, who are we really creating this for, right? It's for people with parking problems, right? People looking for parking, and people that own these parking spaces. And so when we got our heads together, we said, okay, well, we've got to really make sure this works for the baby boomers and Gen X. Who cares about the millennials for now? They will definitely come if it's simple enough. But if it's going to be too complicated and someone's got to fiddle in their app and they make less than, a couple grand a month or even a grand a month when their payroll is rocket, it's soaring at these major metro areas, they're not going to care to go into the app and to make, $600 or $1,000 a month. They already make way more than that. So, really focusing on saving time and creating a true problem-solving solution, I think, is the main goal. But you can also kind of turn that and say, hey, a lot of companies are focusing on the digital aspects for marketing too, right? I don't think society for millennials and for the Gen Xers, we focus enough on the traditional aspects. To add to that, we have a lot of clients in the real estate development space and real estate space for my marketing consulting company, right? Growth Hack, a lot of these companies. Some of those bus stops, they prove to have the highest ROI, sometimes in the thousandths of a percentage. So there's a lot of things to look at, I think, when you really want to hit the market. First, creating the inventory, making it simple, right? Design has to work. And then, going to the users. Usually users will follow if it's built correctly.
Okay, I'm going to follow up on some specific industries in a minute. But first I want to kind of back up to something Shelley said about the data, because I think that's a really important part of this that we should talk about. Before I do that, I want to remind everybody that's listening that if you're tweeting, you can use hashtag Royse University. And also, if you have questions, go ahead and type them in the dialog box. We'll take the questions here at the end of the program. So getting back to the data aspects of this, that seems to me to be where really the value is. I see a lot of these companies, they're not profitable, they're marginally profitable, but what they're really after are getting those eyeballs and those subscribers and getting people signed up. And I'll take it one step further. What I've also been seeing even more than that is not only getting the the contacts and the user data, it's also just more of the metadata, more the data that can be, not just having that user list, but actually having the analytics that come out of the data. How important is that to you folks, people on the call, in terms of the value of your company and something that you're gathering, an asset that you're going to be using to leverage going forward in some way or another? Anybody want to talk about that? Maura, I think I'd want to come back to you because you see a lot of companies through your accelerator. Is that a big part of their strategy? Is that they're going to get data and be able to aggregate, anonymize?
All right. So yeah, I mean, when the product life cycle really is about, you get your MVP, your basically your first viable product out there, and you start to learn about your audience. Remember that for many of these communities, you be wary that the idea and that you have of the community that you're going to create doesn't necessarily become that. It can get hijacked, it can be taken over, right? And so one thing to learn very quickly is to understand who is your demographic, right? You may think that I have a product and I'm targeting new moms, right? New mothers, and it's about 40 million Americans are new moms, and you want to go to reach them, and say oh, I think I'm going to get 5% of that market or something like that. But you end up seeing that your product isn't about healthy eating for children. It's about maybe it's elderly people that want to do healthy eating or something like that. And so your demographic shifts from what you assumed it would be to what it actually is. And having some of the data on that is important, right? You may be like Shelley and doing real estate, and she may have an assumption about her core demographic, and maybe it's completely off. Maybe it's different. Maybe we think that the women are going to be the ones that are the buyers, and maybe it's the men, right? Or who's actually doing the decision making is shifts, and also it could also be the social demographics that also change. So you had also alluded okay, well, I'm getting all this data, I'm aggregating, that's great. I think it's important that you get to know your demographic early on. So if you are spending those highly valuable critical dollars for any type of acquisition, right? So if you're pre-Series A and you're spending cash on acquisition, Roger, that it's sometimes $3 to $20 for an acquisition, just for a download, just for an install, and half of those downloads are never launched. They sit on 50% of all the downloads sit on somebody's phone and never launched. And so this is a very expensive business for early stage companies. But once you're in Series A, Series B, in your growth mode, it's part of the it's part of the budget, right, for acquisition and being smart about it. But the big data at the end of the day is demographic and helps you target in and also adjust the product. So, and I think I'd ask Shelley and Gianni about how are they doing how are they doing this with their product.
Yeah, let me roll into that. So with the luck of the draw with running a consulting firm that focuses on search engine marketing, search engine optimization, a lot of digital marketing efforts, as long as a lot of traditional marketing efforts, is we roll all day with cost per acquisition, unqualified leads, fair growth rates of applications, as well as actual conversions, as far as what's a lifetime cycle of the user versus a user that bounces off, someone that downloads it, says it's not ready for them, and then leaves. Mm-hmm. But we found that there's a lot of conversions, north of 18%. This is 18% of a qualified lead if you seek things that aren't just digital focused, right? So canvassing, going door to door. It sounds really rudimentary. It sounds really primitive. But this is how economics was started, when people really wanted to sell a bread machine or sell a refrigerator, right? And then using those numbers and saying, hey, if I go at these times, right, if this person answers this door, or if I get more prepared with coming there, I can then back it up and even exceed those conversions by more. And then going back to it, right, we've seen some digital marketing campaigns, right, if it's done well, you can get them down. Now, this isn't a qualified lead, but you can get them down to 10 cents per user. Usually I see, though, for creating the initial inventory, you're probably going to be spending upwards of even $60 per user. So it gets extremely expensive. But these are the inventory that is going to be paying you out, right? Driveway spots versus someone looking to park a car, right? These are spots that could be worth tens of thousands of dollars to you versus a one use case that's worth 15 bucks.
Got it. And then how are you finding? So I mean, finding those needles in the haystack, right? Not every person that you convert is gonna give you that ROI, right? And so
Great
what
question.
are you learning? And what are you learning about, like, hey, I'm going to target urban males 18 to 25, or is it, hey, maybe it's people who actually own the real estate and it shifts to a higher age, right? I mean, it's like, hey, it's 35 to 65 are the people, or there must be a sweet spot for you that actually works.
Yeah, totally. I mean, the first target demographic that you concocted was, we're going to focus on people over the age of 40. We just finished a marketing video with one of the producers of Saturday Night Live. We had some great actors in it, so hopefully you guys will all see it. It'll probably be ready in about a month. But we focus on 45 years or 40 years of age and older, just because they're probably the people that own these homes, right? Yeah. And then vice versa, we said, hey, who are the people going to be answering these doors, right? Because if we have, if we can't afford necessarily the people of extreme experience, right, when they go there, then we have to train, generally speaking, from what we found for this gig economy contractors, were the people that were wanting to go door to door for these canvassing campaigns. They were younger. So we had to say, these are the types of objections. When you get to a door, you've got a minute to speak, a minute to give a value pitch, a minute to explain, download this app, right? This app is going to make you money on a driveway. It was really easy. It was really easy. And then we just used the branding on the digital aspects of search engines like Google or Yahoo or Baidu. It was much easier to use that to back up our brand and pay a much cheaper cost per click than to say, hey, I want to buy all of the AdWords clicks and the conversions for parking and then buy out the local cities that we want to get. That's extremely expensive.
Shelley, do you have anything you want to add to that?
Well, I'm not quite sure what Mario's initial question was after all the conversation. Mario, would you mind repeating what you were looking for when you were asking that?
Oh, yeah. How are you doing acquisition, and who is what's your sweet spot for the demographic? I mean, it can't
Yeah.
be anybody under 18 years old, right? And so it's in real estate. So there's got to be a certain demographic that you are focusing on that resonates with
Yeah.
with your community.
Right. Luckily, the National Association of Realtors has done a lot of research on our behalf without me having to reinvent the wheel on this, which I appreciate. So we do know the sweet spot of sellers and the sweet spot of buyers. Something that was actually just unique to our platform was we did not expect that 70% of our buyers were first-time home buyers. We actually expected them to be more seasoned. So that was something that just kind of came about naturally when people started hearing about us in our community right after our demo day. And so that was something that we started to explore more and put more marketing dollars towards. So some of these assumptions that you have can be totally knocked out of the park, and you just have to continually test and do consumer research, of course, which is something that we continue to do. And similar to what Gianni said, we do have a lot of, luckily we're in Boulder, so we have a ton of free labor in interns. And so that's been really helpful in terms of cost per acquisition, in terms of getting our inventory on our website. We use a lot of interns and giving marketing experience while they're still in school. So we've been able to be incredibly lean and just utilizing the resources that we have available in our town and the tools that are available to us. So I'm lucky for that.
Yeah, that's great. And Boulder is a great place to be. I've been to El Dorado Canyon many times. We've only got about 5 minutes left, and we've kind of skirted over what I think is one of the really, really big issues here, and that's just this regulatory environment. And I want to put it back to my two entrepreneurs, and then I'll finish up with talking about some very specific technologies and see what Mario thinks about it. But can you say just a few words about, because I see a lot of these companies. I see a lot of companies doing this, and we always run up against well, almost always, I shouldn't say always, but almost always, there's some sort of regulatory overlay. For example, in parking, I know, how regulated that is in the city of San Francisco and how you have to navigate those regulations. In real estate, obviously, that's, it's very regulated. And I think what you two have found workarounds, but do you have any advice for the entrepreneurs out there that are in their own regulated industries? Maybe it's legal, maybe it's medical, maybe it's insurance, whatever it is they're doing. Any kind of broad words of advice as to how to deal with that environment? Do you engage it directly? Do you hire lobbyists? Because there are, by the way, entire companies that have formed to go out and lobby just because of innovation economy industries that would have existed 20 years ago, or do you find workarounds? I mean, just big picture, what can you tell our audience?
Yeah, I think. Sorry, Gianni, I keep interrupting you.
Go ahead, Shelley.
I think the biggest thing, which is what I spoke to when I first started talking today, is that just continue to do your research. I'm sure Gianni had to do the same thing, which he probably had to learn so much about parking that he didn't want to know any more about parking in his life, which is the same for me. Never stop asking questions, right? Like, there's someone who has come before me and tried to do this, and why did they fail? And try and get in touch with them, and don't be afraid to sit down with someone to coffee or have a phone call with them, because I also think in the early stages of a company, people are so afraid that someone's going to take their idea and run with it, and they're too afraid to talk about it, and I think that that's a little silly because it really comes down to the execution. So I think if you're a beginning entrepreneur, just continue to ask the questions, learn as much as possible, and then don't think that you know it all, because I still today learn so much more about the competition and what they're doing and why they're doing it that way. So I would say that's my advice.
Yeah, and to roll into that, I think there's a lot of major opportunities primarily in the densely populated areas, just because there's more people to conduct not just market research, but to roll out a good market penetration plan, right? These are things that you can pivot and be dynamic. As those are some of the most opportune assets to have as a startup. We can all switch, we can re-engage, we can, we're small ships that can move to a different island if we see the market accepting a certain different, a viewpoint. But make sure your business plan is prepared well, right? Obviously, you get a good law firm. We would have never been able to calculate the different tax laws and ramifications of launching in such a huge but complex city as San Francisco and Palo Alto. We're based in Palo Alto, right next to Stanford, and you'd be very surprised to find that if you work with key players, right? We've got some lobbyist groups that we work with because they have good relationships, and it makes us, when we come to the table, it's more of a friendly shake of a hand than a crossed arms staring at us and saying, well, why are you different than Uber jumping into Dallas, right? Should we be on one side of the fence or the other? Really think of how you want to evolve certain relationships, and then to the end, I think we're really lucky, right? I think we're extremely lucky to be in the place that we are, right? We're in a time where the generational seasons are changing, right? From the baby boomers to Gen X, and then soon thereafter it's going to be millennial, and then who knows the terminology of the next few years or the next few generations to come. But we have different types of responsibilities to a mobile phone, and therefore the mobile phone, it can contain so many more different things, such as like paper calendars, cameras, letters, handheld recorders, right? They're all kind of condensed, and they allow us to use that as a jumping ground for all these new types of companies. So, be very excited. Definitely engage in your market, and don't be lazy. That's for sure.
Hey Mario, the last question is to you. I'm wondering tell our audience where the opportunities are. I've mentioned a few. I'm seeing peer-to-peer legal apps that put directly in touch with the lawyer. Same thing, in medical, a lot of different ways, very advanced. Insurance, I've heard of. Any other things that you're seeing, or do you think that would be particularly ripe, good, low-hanging fruit?
The last one I just saw was drone insurance, on-demand drone insurance. Yeah. So as I like, hey, I'm going to go, observe a farm or some utility, and you can do on-demand drone insurance. I think we are at just the very early stages of the transformation of work. And I still think that even transportation is going to be disrupted. I think a big one would be aviation, right? With some being able to disrupt commercial aviation, which is highly regulated, right? But if you pick up TechCrunch or VentureBeat every day, you're going to see somebody disrupting a new vertical in the industry. The hardest point is going to be that there's always resistance. I think those are my thoughts are there's lots of resistance from government, et cetera, for a lot of change. Specifically, if you're disrupting a billion-dollar taxi industry, you're going to have a lot of really upset people. But I think the next one is trucking. The largest title of employment in the United States is truck driver, followed by office admin. And so definitely some of the largest opportunities are going to be, automated trucks, and we're already seeing that with Daimler-Benz. And admins, it's going to be an AI assistant, right? To do, work the calendar, meetings, etc. So those are some areas. If you look, there's a list of with employment list, like what are the most common job titles out there, and those are all targets, right? Those are definitely targets for disruption.
I didn't know that. Well, I want to thank our panel. I want to remind our audience that it's not too late to tweet to #Royse University if you have any takeaways or comments that you'd like to post. This webinar has been recorded. You can hear it again and again on royseuniversity.com. under webinars. It's also on the Royse Law YouTube site and available. The audio is available for download as a podcast in the iTunes store. We have this is part of a series. This is the second in a series on the innovation economy. To remind our audience that our next presentation will be tax law issues for the new economy. That's on September 21 at 10 a.m. And then finally, we will conclude with employment law issues for gig economy companies on October 19. After this series, we're going to continue with our webinars. We have a webinar on disaster response and recovery on November 21. Once again, thank you, audience, for attending. Thank you, panelists, for being here. Really interesting, and we hope to see you again.
Thanks, Roger.
Thank you.
Ciao.